Welcome to Imprint, a podcast about creating a home and life you love. I'm Natalie Walton, an interior designer, stylist, and best-selling author focused on an holistic approach to homes. Each week, I'm sharing insights and interviews about the creative process to help you enhance both your interiors and well-being, as well as provide you with the tools and resources to make considered and sustainable choices with all that you create. Hello everyone, welcome to Imprint. I'm really looking forward to sharing today's guest with you. It's a return guest, my husband, Daniel Rollston. The reason I wanted to bring him on is that in a recent episode, I shared the journey of why I sold my business, Imprint House. Many of you are familiar with the business. It's one that we've had for almost 9 years. It was a huge decision in our lives. Daniel has been integral to the behind-the-scenes operations, essentially the Chief Operating Officer. He's also had prior experience selling a business, so when the time came to sell Imprint House, he managed much of the process, and you're going to get an insider look at that today. And if you have ever thought of selling your own business, or even if it's just a distant possibility, it's something that requires time, strategy, and preparation. Selling a business won't happen overnight. So in today's episode, we're going to break down exactly what that process looked like for us, step by step. Daniel will share his insights to help you understand what's involved if this is something that you're considering for the future. Or maybe you know a friend or a business buddy who is going through this process or wants to consider this. So definitely share this episode with them. All right, so Daniel, welcome back to the podcast. It's great to have you here again. I'm really looking forward to getting into this discussion about selling a business. To start, as I mentioned in the introduction, I already shared the reasons behind our decision to sell in in episode 231. I also just want to take a moment to thank everyone for their kind words about that episode. I had someone reach out with a message that really blew my mind. And I'm just going to read a little bit about for you. He said, "Your podcast on selling Imprint was a masterclass in strategic clarity, a succinct narrative that distilled years of experience into a lesson on both risk and reinvention. It's rare to encounter insights so concentrated and thought-provoking. You managed to convey a universe of ideas in just a few minutes. Thank you for inspiring me to rethink the bold moves in my own journey. I'm wishing everything great on your next chapter." And I wanted to share that because this is exactly why I wanted to do these episodes. Very few people share the reasons behind why they sell a business or when they close a particular chapter in their business, or, they sort of draw it to an end, why they do that. There have been many instances in recent times where people with quite high profile businesses have kind of just done it in a very discreet way. And I think all of us kind of want to know what's going on here, what's happening behind the scenes, why have they really done this? And I really want to share with you, in a very open way about what we have done and why, we've done it in a particular way. And today's episode is going to be an example of that. So I hope that you're going to find today's episode just as insightful as we walk through the step-by-step process of selling a business. But before we get into the specifics of selling Imprint House, I think it would be helpful to give some people a little bit of context. Now, Daniel, you've been through this process before with a previous business. Can you share a little bit about that experience? What was the size of the business? What was involved? And what were some of the key takeaways you learned from that process?
Yeah, sure. So the first business, we grew that over 12 years from no staff to 35 staff. And by the time we sold it, it had a turnover of about $7 million. We were approached by somebody who was much bigger than us, who was in a position to do acquisitions. And we were quite lucky in a sense that this person was very experienced. They'd had a lot of experience buying hotels before moving into an engineering business. And so this was a protracted process. It took 3 months. It took a lot of negotiations. And I learned an awful lot from it, an awful lot. And I think that gave me the confidence to be able to do it this time. In terms of the process, what happened was I received a phone call and they said, are you for sale?" And I said we could be. We had a conversation on the telephone for about 10 minutes. He wanted to invite me in to a meeting. In that meeting, we then talked about some of the key elements of the business, like turnover, number of staff, profitability, industry sector. He knew all that from or the industry sector from our website. And then we left it at that. 2 or 3 days later, he came back to us with an offer of, it's called a heads of agreement, with a buy price, how he got to that buy price, so being the value of the stock, the value of the goodwill, and the sort of broad terms of, did we want people to leave? Did we want to stay? We ended up having to stay for 2 years for an earnout. And then we spent the next 3 months negotiating the finer points of this. So the value of different things, time frames for different things to happen, um, what warranties we had to give, what was included in the sale, what was excluded in the sale. But I think very much it was about, in that time frame between the first telephone call and the first meeting, we really had to think about what was going to be of value to him. And I think in this case with Imprint House, it was very similar. So in the previous case, what was valuable was industry experience, a strong brand name recognition, and good management and systems that were in place.
Amazing. And like you said, selling a business isn't just about listing it for sale and hoping for the best. Even in cases where a buyer approaches you, it's not a simple transaction. It involves ongoing negotiations, contracts, and legal considerations. So, can you walk us through what happened when we went to sell Imprint House? In episode 231, which of course we will link in the show notes, I mentioned that we were initially approached by an aggregator. As part of that process, you had to put together a presentation outlining the business's assets. Can you share what was included in that presentation and how it became a foundation for future buyers?
Yeah, sure. So, and I think it's also relevant here to think about what happened in the previous 6 to 12 months, because we're in a situation where we were both looking at both of our businesses, and things were starting to change with the family. And I very much had a focus on making sure that instead of investing for the very long term with Imprint House, we started looking at, okay, for today and for this month and for this quarter, what do we need to do to make that as organized as possible and profitable as well? So in the previous 6 to 12 months, we'd done things like we brought our buying in-house. So we did have someone who was a buyer who was working with us, who was sourcing products that we might bring to market in a year or 2 years. So we really brought that into house and focused very much on the transactional side of the buying, which is something I was doing. So that's just ordering, restock reports, that kind of thing. We brought our new products to market, which was our lighting, which was our own proprietary product. So that was starting to gain traction. We were starting to sell some volume of that. We'd also done a lot of marketing and built a lot of systems, but we're at the point where we had to decide whether we were going to continue to build systems to scale for the next 12, 24 months, or did we just have enough systems for today, for this month and this quarter, and be able to run with that? And the decision we came to was, yes, we had enough systems. And so we brought our marketing in-house as well. So we just let the existing systems run there. That was, marketing by EDM and through the website. And obviously all those inquiries that people make, we're responding to those. So we'd made a lot of changes in terms of being organized and bringing things in place, and having a lot of good systems there. So in terms of the process, and getting back to your question, the process and the presentation we did to the aggregator, so it came back again to thinking what was the value to the aggregator, and what did we put in that presentation. So the first part of the presentation, so it was a slide deck, and we used, Google's got a tool for that we used. And so the first part of the presentation was, there was a number of slides about the products. So actually, what do we do? So there was an outline of the products, where they're sourced from, the industry category they're in, what they're made of, and why they're popular with our customers. There was now then some information about the culture that we had within Imprint House and our values and what we stood for. There was another series of slides about our marketing, the type of activities we do, and the type of engagement that we have with people who see our marketing. And then there was another section on financials. So, what was the turnover? What was the profitability, and where we were spending our money? And then there was a final section which we need to add, which is why do we want to sell? And so that completed the slide deck for them.
That's really helpful because it gives people an idea of what they need to prepare. Once we decided to sell, we initially explored the aggregator option, but when that didn't work out, we listed the business independently. That's when we started receiving inquiries. Finding the right buyer was crucial. Can you talk about how we approached that? Who were we looking for? And what were the key considerations in choosing the right fit?
So we were looking for, we'd obviously put a lot of effort into getting the brand and culture of Imprint House right, and what we wanted to do with Imprint House as well, which it started with daily imprint, which was giving a voice and giving some inspiration to people who are in creative pursuits, and we really had the value of taking something that people were doing creatively and then helping them to market that. And we wanted somebody who was going to continue with that, who very much liked liked working with artisans and liked artisanal products, and also somebody who really, let's face it, wanted to make the world a little bit more beautiful as well. And so we had a number of inquiries, and some of them were just out and out not right. So one of the inquiries I had was somebody who had 2 eBay shops, and one of them was a discount lighting shop, and they were just looking for another brand or product to tack on. They clearly weren't right. They didn't take an interest in the artisanal value of the products. Another inquiry we had was somebody who was from an engineering business, and they wanted to, yes, they could understand the mechanics of the business, and they could understand how everything worked and the system and the financials, but they didn't have necessarily the aesthetic or the intent or even the will to again work with the artisans and to be able to to find beautiful products that are going to fit in with the suite of things that we already had. And so then when one of the people came along, which was Zena, and we had our first conversation, and she told me about what she did and what she valued, and this is very much unprompted as well. At this stage, it was just a conversation, and it was from that point, it was almost like there was some chemistry there that this is the person who was going to take Imprint House and take it further than what we could have done. So I think the first key step is you have to know within yourself what your business is worth, and you've got all these other points about products and working with artisans and culture, but really you need to know what is that worth and what's the market prepared to pay for that as well. So um, for so the first thing I had to do is I had to take our financials and create what's called a normalized profit and loss. So what a new buyer is interested in is uh, is what happens in a given month, quarter, year in terms of orders coming in and orders successfully going out and being dispatched, and what were all your costs involved in making that happen? What were your marketing costs? What were your warehousing costs, staffing costs, shipping costs, all that kind of thing. And so what I had to do is look at our financials and take out things that weren't really um, weren't really part of that picture. So we had made a decision 12 months previously that we would take our buying in house. some of the previous buying role, some of those costs were reflected in the profit and loss. So I'd been doing that for the best part of 11 months by that stage. So those costs would come out because I was now doing those. Our marketing had been done externally for a large part of the year. However, that was all in place. And so really, to continue running the business, that salary or that cost for that person didn't need to be on the normalized profit and loss, which is the costs, the revenue and costs and profit for running that business for that period of time. So once I had that, I then was able to look at, okay, well, and doing a stock take, of course, to work out the value of our stock. So we then had two things we can work with in terms of working out a price for the business. So, which is the price of the stock, and then there's the price of the business. What is somebody prepared to pay for the business? And you hear this term spoken about, which is called multiples of earnings. So you look at very large companies like, tech companies might have a multiple of earnings of 30, 50, 100 times earnings. So that's what is the value of the business compared to how much profit it makes per year. So when you get down to smaller businesses, you might get a multiple of, say, medium-sized businesses, you might get a multiple of 5. Smaller businesses like Imprint House, a multiple in the market is usually, 1 to 2 times profit that you would make in a year. And so that's where we came up with our figure. So we knew that we wanted to exit out of the business, so we set the price at a multiple of 1 plus the value of the stock. So that was the first thing, was to work out what it was actually worth. The second thing in terms of the process was we had the initial phone call, which happened in the evening, and then we had about 2 or 3 days in which time I refined the slide deck. So I took the slide deck that we'd used for the aggregator and didn't really have to do very much to it, but perhaps added or took away some things that were more relevant to a sole practitioner owner versus a corporate owner, say. From there, we then, yeah, yes,
And can I just ask, Daniel, sorry to interrupt for a second. I feel that we haven't
yeah.
really explained what an aggregator is. So maybe this is an opportunity to just quickly explain a little bit more detail about what an aggregator is. Can you explain that?
Yeah, sure. So an aggregator is somebody who specializes in buying lots of different Shopify brands, usually within an industry niche. So the company that approached us had on their website, they said, we specialize in brands that people who want to exit their brand and are in the homewares industry. So they had started to buy, and I think by the time they spoke to us, they'd done probably 5 acquisitions. So they had a suite of little brands that were all, servicing the homewares business, and they were looking for additional brands to build up a master business, if you like, servicing homewares. So they're very, very much interested in the corporate side, the nuts and bolts, the drilling down on the profit and loss numbers. Yeah, not so much interested in the artisanal, and in a sense that was my reservation with talking to the aggregators anyway. However, I could see at the time that it was a very good exercise in putting together the slide deck, and it was a dress rehearsal as well. And I guess somebody who's a owner proprietor, where they might be different is they very much bring their own personality to it, and so they're interested in the fun part, which is finding beautiful products and dealing with artisans and finding beautiful projects to be part of as well. There's nothing better than having your beautiful product sent out into the world, and then months later there it is in a magazine feature. It's a great feeling. So yeah, that's the difference.
Great, thank you. I think that's helpful for anyone who is new to this process to know. So you were breaking down that you had previously got the presentation, you were refining it, and at what point had you also got the interested parties to sign their NDA? Was that before any kind of initial conversation? And we should explain an NDA is a non disclosure agreement, just in case people are not familiar with that term.
Yeah, sure. So the very first conversation we had was so we didn't discuss the brand. We discussed very much generics. So the business in the homeware space, these are the products. This is the approximate turnover. This is the approximate profit. And if you'd like to sign a non-disclosure agreement, then we can take things further and talk with you further. So in terms of timeline, you're talking about one conversation well, firstly they see the advertisement for a business for sale, and we haven't really spoken about that either. So which we did list. We looked at listing it through a brokerage, and the issue there is that having handled the previous business sale, I had the confidence, and also had spoken with a broker sort of 2 years ago about exiting Imprint House, and I just couldn't see the value in what they brought to the market apart from finding leads for us, because what do they really know, and what can they really talk to the buyer about, other than what I can present to the broker? They can then present that to the buyer, and they're not going to know it as well as I would know it. So we did have one conversation with a broker very early in the piece for this sale, and I'd asked them where they get most of their leads, and they told us that they get them through a number of different websites, and one of them was Seek Business, and that's where we ended up writing our listing. So getting back to the time frame, so we had people find us on the listing. We had then a telephone call to just mention things a little bit further, with a view to then having them sign a non-disclosure agreement. So that was then sent immediately after the telephone call, with a view to, once we received that back, then presenting the slide deck to them. And so that slide deck conversation, I think in terms of timeline, that was probably 3 days after the initial conversation. And sorry, what was the rest of the question?
Well, I guess then, what are the next steps? So, was it then creating a heads of agreement?
Okay, so after the slide deck, so obviously we have a day or two to digest the slide deck. I think I might have finished the slide deck with possible next steps, because I think at every stage of the process we want to be letting people know, okay, what's the next step? If I want to take things further, what do I need to do? So it's just a matter of making that process easy for people as well, because I had done this before, but Zena and Alan John, I don't think, had done this previously. So we ended the slide deck with, okay, if we want to take things further, then we look at a heads of agreement. And what a heads of agreement is it's a broad agreement between the two of you. It's not a contract, but it's a broad agreement between the two parties, which says what your intentions are. So very simply, it said our intentions are to, when we sign the heads of agreement, we will provide you with information in a timely fashion that you'll be able to look through and ascertain if the business does actually have the value that we say it has. And you can ask questions, and we'll respond with any sorts of questions. And we will do this by a certain date. And I think the timeline we put on it was about 10 weeks, something like that. And so we had the date there, and the intention of the heads of agreement is that we will sign a contract on, I believe it was the 30th of September. And so that was our intention. And the other party also has to say their intention, and their intention is, obviously the obvious things that both people have to do is to be honest and fair and timely and all that kind of stuff. But their intentions specifically are, yes, they're interested in buying the business, and yes, they'll ask questions and satisfy themselves as to the value, and they intend to be able to sign a contract by the date, and also they have the means to be able to execute that contract as well. So they have the money organized for that. And so post the slide deck presentation, It was then, I believe, maybe 3 or 4 days. Um, so I think after the presentation, I then sent the heads of agreement within a day or two. Maybe there was a telephone call in there. What did you think? How did you feel? Would you like to take things further with the heads of agreement? And I can't remember exactly, but my feeling is it was probably around a week um, between the presentation and then the signature of the heads of agreement. Um, and so from there, we're down to a process called due diligence, which is this is where they have, and I had spelled out because there's a lot of information here in due diligence. The buyer just basically has to be satisfied that that what we've said in the presentation is true, and if there's any skeletons in the closet, they have to be satisfied that they've found them, and we as the seller also have to make sure that if there are any skeletons, we tell them and we say, well, for example, we sent a light out, it was broken in transit. Um, you know, we're currently in the stage of replacing this for a customer, for example. That's the kind of thing you have to tell them. So we then go through due diligence, and so I think after the heads of agreement, probably 2 or 3 days after that, I had prepared a timeline of due diligence as to what things we could cover in what week of the 10-week period. These were things like satisfying the buyer that our product margins were everything that that we said there were, and we did that by showing things like supplier invoices versus the Shopify sales value. There were things like satisfying the buyer that the turnover was what we said, which we did that by the reports out of Shopify, which is brilliant, by the way, in terms of giving a third-party verification of your data and what you say your business is doing. Product mix, so again, out of Shopify, and then we went through to marketing. So what was our user base for marketing? What was our sending volume? What was our open rate? What was our click rate? What was our buyers off each newsletter rate? All this kind of thing. So, and then there's the next stage: IT systems. What apps do we use? So we had all these things spelled out over the 10-week period, so that we had a program to work to. And then over that time, I guess it's further qualifying too. So we're becoming comfortable with the buyer. Do we still believe that there's somebody that that can do this? And they're also becoming comfortable with us. Is it what we say it is, and is it nice and organized, and will it be a good business for them?
One thing we haven't really touched on yet is business valuation. Many people think of valuation purely in terms of revenue multiples, but there are other assets that contribute to a business's worth. In our case, the things that stood out to Zena and Alan John were the strong systems and processes we had built. They specifically said that to us actually several times, which allowed the business to operate independently of us. That was intentional. We'd structured it to run smoothly, even without our direct involvement. We also had maintained and grown an engaged email list. We had a strong Instagram and Pinterest accounts. We had been running a successful Pinterest ad strategy with a strong return on ad spend, ROAS, as it is often referred to. We had well-documented processes and training for staff, and really had nurtured, strong relationships with suppliers over many years. So all of these different assets were coming together to become valuable for the business. And if you're starting a business from scratch, these are things that take years to cultivate and fine tune and finesse all of these different elements. So I think it's important to share, when you are thinking about what are the assets of your business and what is potentially appealing to a future buyer, these are some of the factors to consider. And then these become the elements that you were discussing with a buyer, the assets of the business. Obviously, stock is a huge part of it, but it's not everything within the business. When we're thinking about how we're structuring the deal to be beneficial to both parties and really looking at it, what are they getting when they buy this business? We were speaking about just before we started recording this, this idea in many ways that we're kind of buying a business in a box in many ways. It had all the elements that you needed that they could just pick up, take, and just keep running the business. Everything was running really well, having systems and processes, having staff that were well trained. They met the staff and are continuing with them. And that was a consideration for us as well. So do you want to speak then, Daniel, to some of those other things that got into the discussion with a potential buyer? Because as the handover gets closer and closer, you're showing them how to run the business and you're almost becoming a little bit of a mentor too.
Mm. Yeah, no, that's right. So, that was part of the due diligence as well. So, we had a due diligence session on systems and SOPs, standard operating procedures. So, we had been fairly diligent in setting up SOPs for a lot of things. Things from how we order forecast, how we order, how we receive stock, how we package orders, how we respond to customer service emails, how we do Instagram posts, how we do newsletters, how we do journal posts. So we had all this always documented very, very clearly. So we could just literally just take that series of documents and just go through them one by one as to how we produce each of these things. And then we could show them on their site visits. We could show them in the showroom, the finished product of how we would do these things.
So as the sale moved forward, we structured a transition period to ensure a smooth handover. There were a few key things that were important to us. These included a business name change. We wanted the new owners to establish their own brand identity, a gradual transition. So for the first 3 months, they took over operations while we remained in the background for support. And this allowed them time to get a better understanding of the business before making any changes. Ultimately, we want them to do well. We want them to make this process as successful as possible for them too. And we created a clear timeline. We allowed time for them to implement their own plans before publicly announcing their ownership. So Daniel, can you please explain what this transition looked like and how we ensured a seamless handover?
So yeah, what we did spell out is exactly what we wanted and what was for sale and what wasn't for sale. So the big things for us were that we wanted to exit the business. So this wasn't like my previous business sale, which was a 2-year handover. This was very much a 30-day handover. So, and for anyone who's running a business, if you think, how am I going to hand this whole thing over to somebody else, and within 30 days just be able to leave it to them to run, that was a big burning question for, I think, both us and for Zena and Alan John as well. So, and we spent actually a lot of that due diligence phase. We probably spent a lot of it in training as to how you would run the business. The other thing that one of the other major things was the name. So Imprint House is, whilst the name it's dear to us, it's something that's in Natalie's, in your books, hundreds of thousands of copies around the world, and it's very much something that you created. But now that Dina and Alan John have it, it's very much their iteration of the business, and they will do amazing things with it. So other things that were in there is the Instagram account. So that was north of 50,000 people. The EDM list, the relationships with the suppliers. I think that covers it.
Great. So when someone is getting to the point of selling a business, what would be some of the big tips that you would say to someone if this is something that they want to do? I mean, one thing that comes to mind, actually, there are two things. It's so similar to renovating a home in the sense that when you're renovating and selling a home, start earlier than you think, because it's going to take much longer than you realize. And secondly, there's going to be a little bit of an emotional release. I'd be really curious for you to share that emotional journey to letting go of the business and feel that, personally, I'm in a place where it's like when you hand over your home and you sell your home to somebody, you hand it across to them, and part of you is like, oh, we had so many great memories here, but now it's time to hand it on to a new family to enjoy this space and make it their own. And it's It's a little bit of a bittersweet moment. So, first of all, can you share some tips for what people should consider if this is something that they would like to do with their business? And then also the emotional aspect for you. What has that journey been like?
Sure. I think the first thing to say is that it's possible. For a lot of people, it seems like this ridiculously difficult goal to achieve, but it's certainly possible. And there's a process, and there's people buy and sell businesses all the time. And there's even, I would say, there's a certain type of person that wants to buy businesses as well. So there are people out there that want to buy businesses, and it amazes me how many people with and public businesses that perhaps a lot of people know, um, they just decide to close rather than sell it when there are so many creative ways that you can do with the, you know, for example, changing the name, or there are just there are ways to do it. So that's the first thing, is that it's possible. The second thing I'd say is that it, and like you say, you need to start these things early. So I think being organized and trying to have systems in place and be organized every single day, um, and if we wind back, a year or two ago, maybe three, there are sometimes I would think, why am I doing this SOP? Why do we need to do this? And you do something, you do some training, you train some staff, you then write an SOP about it, and you think, okay, that's great. What's that really do? But I'll tell you one thing: when we came to actually sell it, and we had the SOPs in place, and people were working to the SOPs, it was just invaluable. And not just that the business ran well; it's that we were able to communicate how it ran. And I think that's so. If you are thinking that it's a possibility one day that you might sell your business, then I would say start early with your SOPs and getting organized with things. Um, the other thing is being organized with your financials as well. In Australia, where you know, like it or not, we have quarterly compliance deadlines where we have to report to the ATO, and so that actually means that our finances are done by our bookkeeper every quarter. So that was it was quite good that we had our sale process in July, because our bookkeeper was then trying to complete our June 30 financials, which is actually our financial year financials, as well as the end of the quarter financials. So being organized in terms of that was super important. Um, and in terms of the emotional journey, well, it was difficult to come to a decision to sell the business, and we went for many of our morning walks. And you had read the book